It's here. So are you ready? Because the stock market is at a crossroads, and which way it goes tomorrow is going to really matter. To make it really simple, there's one of two things that's going to happen tomorrow. We're either going to get a fail breakdown, which means we get back above 555 for next week, or we don't, and we get a breakdown, which means we're probably looking for more downsides. Okay, that seems really simple. Yes, the market's a little bit mixed today, but looking back at the last week, yeah, it's pretty ugly out there. Look at Nvidia, down double digits. Yeah, that's not fun. The other thing to be mindful of is that Bitcoin's down by 3.7% today alone. So when I see this, it doesn't give me warm and fuzzy feelings because Bitcoin on the left, S&P on the right. So far, the pattern's tracking. So if we can't form a new all-time high and then also lose the 50 DMA, that's not good. And we could actually fall back into greed. Back into fear. We were in greed a week ago. We're currently in neutral. We could fall right back down to fear. So what's really important here is that if we're actually going to go higher, which means new all-time highs, we want to form a low, higher, low, higher, low, just like we did last time. Low, higher, low, higher, low. So we can't go below 44, which means we don't really want to go back down at the fear. So what exactly do we do? Because the stock market appears like there's some stinks out there, right? Stinks go down, stonks go up. And there's a lot of both right now. There's stonks and stinks. So let's make it really simple. One of two things can happen by the end of the month. And here we're looking at a weekly and a monthly candle. So all this means is that we want to see us get back above the previous all-time high, which means if we decide to go up, and then we buy the back test. Option number two, we don't hold 550, which as of right now, we're not. You can see here that on a daily candle close, we're closing at 548, basically right under 50 DMA. And that basically means that if we go much lower and we close the week down here, hey, there's a good chance we could go lower. How much lower? Looking for as low as 510. So want to buy as close to that as possible. If you're feeling bad about your losses right now, well, don't feel so bad. First thing you want to remind yourself of is that I mentioned that if you were a scared little wuss as the market went lower about 2-3 weeks ago, about a month ago now, you had a chance to basically sell back at break even here relative to the all-time high. If you didn't, you should still consider buying, even if we start moving lower tomorrow, because I basically just told you that I'm looking for a retest of the low here. I can't guarantee where stocks are going to go. I just know that people generally fall victim to their emotions, which means they tend to get quite greedy as we're going up, and they tend to get quite fearful as we're going down. So think about it now. I've been warning for a while which way we could go. Now we're going to find out which way we do go. So now let's read this headline here because I was a little bit surprised to read this, to be honest. Trump's media's 69% plunge wipes out billions before the lockup ends. Oh my goodness, how much is getting wiped out? $3.7 billion haircut. Again, ironic because it's quite the haircut he's got there. Out of his personal profit, $3.7 billion. Well, look at his personal net worth is. For decades, it was an estimated at $3.8 billion as of early September 2024. Well, 3.8 or 3.9 minus 3.7, ouchie, that hurts. That stings. Got to take a little bit of a walk of shame. So I'm not trying to say Trump is bad. All I'm trying to say is that this is a very big loss. So whatever you're currently dealing with, whether it's a small loss or a big loss, keep it in perspective, because even Trump, again, a guy who's really strong. This was him in 2020. He looks a lot stronger now than he did back then. All right, now we got to think about what's been working so far this month. So healthcare, utilities, financials, New York Stock Exchange. I've been noticing a lot of knee-jerk reactions where it looked like the trade this morning was one thing: sell RSP, buy MAGs. That's what it looked like. So sell equal weight, buy MAGs, buy the Magnificent Seven. Well, that trade worked out until the end of the day. And the other thing that I started noticing into the afternoon was just sell everything and buy the big guys. So the only two things that I noticed that are green here on my ETF list is XLG, which is the 50 biggest stocks in the S&P 500, and then also MAGs. So I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, that would be greatly appreciated. So we talked about the significance of these weekly charts for both the S&P and the NASDAQ. Again, the NASDAQ has to recover by, how much is it here? We have to rally by roughly 2% to have a failed breakdown next week. Well, we're going to have to have a pretty big move, and we know exactly what we're looking for that. It's going to be the ADP non-farm payroll. So if we have a look back to here, I can't remember if I mentioned this. I had to re-record once because I was coughing. Anyways, so I think this is going to be bullish. The problem is that the data we got today was not received particularly well, but it was mixed, right? So the ADP non-farm payroll numbers came out. We'll have to see. So I'm not sure what's going to happen tomorrow. I still think it's going to be up, but the technical evidence is telling me that, hey, we're going to need a pretty nice rally tomorrow to save these charts. So the S&P is going to need roughly 1.2% to get there. We can definitely do it. We have to reverse a lot of the damage that we really did on Tuesday. So we're going to have to see participation by some other names. Last thing I just want to go through here is just briefly looking at these different different daily charts, because I just want to point out some key areas right here. We rejected on a gap fill. That's all we mustered. We couldn't make it to a weekly higher low test. We just rejected on the gap fill here. Looking at the dollar, dead cat bounce and moving lower. And we already have a death cross here. So that's not good. That's not good for the dollar. It's good for stocks. VIX, we have a golden cross, and it's actually down by 6.7% today. So we need this to come back down closer to the 50, which would basically mean the market's going up, meaning the S&P. We can also look here and see the 10-year note is down. Again, a nice little leg lower. And then for the inversion, we're looking at 1.004. So just under 0.5% for us to really get there. The SMH is already battling here for the 200 versus 50. Bounce off the 200, reject on the 50. Let's see what happens here. It's getting awfully close. It's already starting to show weakness as well. Here looking at MEGs, this looks like a head and shoulders. So let me just draw this really fast here. We can see we got a shoulder, and a head. So unless we reclaim the 50 DMA, hey, it's nice, it's green, but it's not good enough. XLG, same thing. When I look here, that looks like a rejection on the 50. It's a pretty big candle. So was all this buying going to sell? They're not yet, but let's see what happens into tomorrow. RSP, what do we see here? So pretty much the same thing. 200 to 50, try to hold the 50, lose the 50. Now we're basically in the middle. Equal amount of distance on the top and the bottom. Pretty big selling right here too. Woof. Look at RSP, back testing its previous top. So is resistance going to turn into support? That's a really big question, because RSP has been pulling ahead here. And then IWM, that's one daily candle close below the 50 DMA. So if we get a second one tomorrow, that could be a potential trend change for it to go back down to the 200 DMA. All right, that's it for today's video. So we can either come hang out with me at 9:15 or click the video on the left. Thanks so much.